Morning all. How are we all doing? Morning FTNet, morning Danny, morning Leon. How are we doing? Happy Wednesday. It's the last day before I've got a week off. Brilliant, isn't it? Get Friday off and Monday off. Right. Today we're going to just go through the FX pairs, do the usual stuff, look at the news. I'm going to cover the changes as well in the ORB update that I've been doing. And also have a look at a quick look at the breakout strategy performance that I've been working on as well. I'm hoping to get a copy of that breakout EA done in the next week so I can get it out so you guys can test it. But I haven't managed to get much progress on it yet because I've been working on fine-tuning the ORB side of things. So I'll go through all that basically this morning, and we can sort of have a look at it and put a plan together basically. So just a quick recap on yesterday. Wasn't much movement, wasn't any movement yesterday. It was absolutely dire. The US session yesterday was absolutely sideways. So there we are. So we opened basically yesterday, all the US indices were exactly the same. So that was the opening range pretty much yesterday there. And it basically tried along, failed, stopped out, got into a short and sat there for ever. Sideways, did absolutely nothing. Then it finally broke out to the downside, as you can see, the short triggered and got out down there. So really rough day yesterday. Couldn't do anything with it. So the DAX and the FTSE yesterday made about $300 odd, and then had 3 losing trades on the NAS, the Dow, and the S&P, and they moved exactly the same yesterday. It's uncannily identical price action, like really like exactly the same. These they've all gone into sync at the moment, really into sync. It's really odd, but I mean, they're obviously correlated normally anyway, but this is really correlated at the moment. So yeah, so got into those 3 and then made a profit on the shorts on them, but yeah, couldn't really make it much yesterday. So a little bit of a loss yesterday, unfortunately, which is fine, but it means the week is down, so I need to recover that today. So far this morning, obviously there's very little volume going in, as we can see. There's a gap down situation today on all indices. So there was more talks about the tariffs yesterday. Everything's gapped down this morning. US markets have gapped down as well. So I suspect we will do a quick gap fill because it's not a very big gap. I would imagine the market will just quickly do a gap fill the inefficiencies, and then we'll see where we go. But negative potentially today again. So as you can see, there's just no volume in there. The market is open, isn't it? I was just checking I'm actually on the right time. This is absolutely dire. Look at it. So certainly not going to be taking a 5-minute ORB today. Morning, Dennis. Morning, Chris. So yeah, no 5-minute ORBs today. Be lucky to get a range in at all. Let's just see what happens with this candle, and then we're going to have a look at the FX markets and the news. Yeah, so 4,800 and 1,700. So probably will get a 10 or a 15. I've fine-tuned my settings at the moment. I'm using ADR 3 at the minute. I think at the moment, because these markets are swinging so volatile, we need to be looking at shorter time frames basically for average movement. So yesterday I went back to ADR 3 just so that I'm keeping a little bit closer to what is actually happening intraday at the moment. My stops are still 10%. I'm using 15% of the range as an entry instead of 20. So again, I've reduced that down slightly, just because we aren't getting quite as much movement at the moment. The market's still in shock a little bit. So I've just reduced the numbers down just to try and get into some positions. But as you can see, it's just dead at the moment. Dead as a door now. Really widespread as well today. We'll see. We'll come back to that in a minute. So main news today, obviously, yesterday we had the CAD CPI that came out as a negative, a very big negative as well. We were expecting a 0.7. We actually got a 0.3. So if you look at the Canadian, obviously the market rallied against the Canadian dollar, but it's not a massive rally. If you look at the actual movement that we got there, it was 85 pips. So it's less than an ADR. We didn't get a lot of movement off of it at all. Again, as I said last week, CPI numbers, unemployment numbers, they're just not going to have as much impact on the market at the moment from a directional bias perspective, because it's all about tariffs and economic change. So these numbers will move the market, but they're not going to drive the market at the moment. It's nothing to do with it. The CPI is going to be affected by the tariffs rather than the tariffs being affected by CPI. So when we get these numbers coming out, that is a very big miss. A 1.1 forecasting a 0.7 and actually getting a 0.3, it's double the forecast. It's a big number. That usually you would expect a huge 150 ADR day off the back of some number like that, but it didn't bat an eyelid yesterday. It did, it moved, but it didn't really move. So all these numbers down on forecast. The UK this morning down on forecast as well. So we've had a little bit of movement on the pound this morning, but again, really small. This market, there you go, there's your CPI. This market really isn't moving at the minute because there's just shock and sort of unknown territory. We don't know where to go, do we? Because it's all about what he's going to say next. Yesterday, we had new sort of escalation in the tariff conflict. So obviously, this is why we've got the gap down today across the board. So all markets gap down and dropped today so far. However, obviously, it could come up and do the gap fill. Yeah, gaps tend to get filled. So it is a good long, but you're longing in a potential continuous bear market at the minute. So really hard. As I've been saying for the last couple of weeks, with this type of market, you go with the flow. If they're dropping it, you sell it. If they're popping it, you buy it. But you're going to struggle to get longs to work anywhere near as much as shorts at the moment. So there is a gap fill opportunity there. This is obviously the undoing of the tariffs or the pause, the 90-day pause. But as you can see, the market for the last 3 days, absolutely no confidence in the stocks. And it's been selling the dollar off. So still the same. Weak dollar, weak stock market as far as I'm concerned. I don't think there's any reason we should be going, yeah, now's the time to buy. Yeah, it's not. Then was the time to buy because he manipulated the market back up and made all his mates rich. That's gone. So, so it's very difficult to sort of get a gauge at the moment on what's going on. So the CPI number down today, we've got retail sales at 1:30 this afternoon. That's an hour before, obviously, the market opens. And at 2:45, we've got the Canadian interest rates. They're forecasting a 2.75. No reason why. We've had no real indication why they would do anything different at the moment. But obviously, Mark Carney's in charge now, former head of Bank of England. There may be something coming that we don't know about. So you need to be aware that there might be a shock this afternoon, but unlikely. Never know, though. Press conference will tell us what their forward guidance is. We've got Powell speaking at 6:30 later. Again, more friction coming. Powell is not agreeing with Trump and what Trump wants to do with interest rates at the moment. So there's potential for him to just drop bombs at the moment pretty much every time he speaks. We got the CPI for the New Zealand dollar coming overnight, and then tomorrow we go into the euro rates and the Australian unemployment. So again, that's going to be dropping tomorrow. So from basically 1:30 this afternoon onwards until basically 1:30 tomorrow afternoon, it's solid news. And then Friday is a bank holiday. So the market is going to want to get the vast majority of its movement done today and tomorrow. So there's a good chance we might get some volatility coming in on these, which would be great. And again, just go with the flow. Whichever way the market decides to drive it, it's probably going to head for an ADR, basically. So reversals in line with current trend. basically the best thing to do at the minute. So that's your upcoming news. Obviously, overnight we've had the CPI numbers. Stocks fell again, basically, in the Asian session on the Chinese news and obviously on what was happening with the tariffs. So basically, Trump saying it's back in your court now, and we'll see what happens. That was an interesting comment last night. I only read that this morning. We may want countries to choose between us and China. We get everything from these guys. If you want us to choose, we're choosing these guys because they supply us everything. Yeah, this is suicidal. I don't know. Again, what is he playing at? If you want to make us choose between you and China after what you've done, who do you think the rest of the world is going to go for? Yeah, we ain't going to side with you, are we, Mr. Trump? Because you've buggered us all. So, weird statement to make. But anyway, that's the way he wants to play it. I'm pretty sure I know what most countries are going to do. So lots and lots of extra news coming through. But again, all this red news wasn't Trump. So unless it's about what Trump is doing, it's not really moving the market at the minute. So we'll see what happens today. ADRs, there was hardly anything on the ADR side yesterday. Here, as you can see, yesterday was a real sideways day in the markets completely. So obviously that's the stock index there. Euro Swiss, very much sideways. Yeah, everything basically sideways. Even the Canadian pairs, yeah, little bit of a rally on them, but nothing really moved yesterday at all. It was totally sideways, same as the day before. Very hard to make money with any kind of strategy in this unless you're buying highs and lows of previous days. Yeah, so sideways day. Yen did nothing. It's just dead. Market's in shock still. We're waiting. That's a lovely looking little long there, but don't expect to get more than sort of half an ADR out of it. Yeah, so it's just get in and get out as fast as you can on stuff at the minute, and just sit and wait for the next news item to come through. We have got some weekly range extensions. Aussie dollar CAD. So that's Monday, obviously there. Aussie dollar CAD has hit its weekly range again. Got to take these with a little bit of a pinch of salt at the moment. We're looking at the last 10 days average weekly range. Obviously, the last 10 weeks rather, average weekly range. The last week was a hell of a lot bigger. So we're just hitting these numbers early because obviously the market is getting squeezed. The price action is bigger. Although it looks sideways, a lot of the stuff, apart from this one, it is still a lot bigger, the volume and the movement that's going through. It's just obviously everything's amplified at the moment compared to, normal price action. Now price action, yeah, it's just everything's amplified. So you're going to get signals triggering a lot more, but they're not necessarily huge moves. So big, nice bounce going off that one. So lovely reversal alert on Euro Pound long look on the hourly. All time frames signaled that W pattern reversal. That's picked up nicely, but that's obviously moving on week CPI numbers for the pound at the moment. So obviously that's a miss. Interest rates likely to be dropping. Weak pound. So yeah, so there's a few things there, but and obviously you've got the pound CAD and the pound US. So US and Canadian moving a lot. Extensions on the 4 hours and the hourlies on those. But as I say, mean reversion at the moment. Difficult because it's whatever you get into at the minute, it really needs to be a stop loss based strategy at the minute, because if the economics changes again, it's just going to take off, and if it takes off, we just don't know when things are going to come back at the moment. So entries on reversal alerts and things are great. Any breakouts. Hello. Waiting for an update on what? Weird. What's going on there? Terminal disconnected. Okay. So yeah, reversal alerts on lower time frames. What the hell is going on with the pound CAD? Why is my data not there? There we go. What happened there? That was weird. So you've had a reverse alert going in there. Look. So yeah, signals short term, great, but I'd be going in line with the current trend the vast majority of the time. But you got a mean reversion opportunity for a short there. But you'd have had a mean reversion opportunity there. You probably had one there. Didn't get one up there, but going against the trend at the minute, probably not the best thing to do. So there are a couple of opportunities for shorts on a couple of things at the minute, but again, not particularly interested at the minute. Let's just quickly look at the indices. So no trades on the DAX at all. 15-minute ORB, absolutely tight. Look at that. So there's your 5, 10, 15. Absolutely tiny price action. Less than 10% of the average daily range gone in at the open there. So there's just no volume today. There is on the FTSE a short and long opportunity on the 15. Only just. So as I said, I've got mine set to 15% of ADR, not 20%, which is the default at the moment, just to try and get some trades on. So obviously the price action at the moment at the opens is very lackluster this week. So there will be a long or a short taken there. Just to quickly go over the new logic with you. So I'm just going to quickly cover what I've changed in ORB. This is ORB version 3.04. I skipped 3.03. That was a development version in the middle. So what I've done, basically, the new version, you'll see some changes between version 3.02, which is the latest release version, and 3.04. We've got the data here now showing the previous day's profit. We've got the next risk amount shown, and that will be a monetary amount depending on whether you're using lots or whether you're using percentage risk or monetary risk. That will show either lots if you're using fixed lots, or it will show money if you're using a percentage or a money risk. The last trade profit is also displayed. That's because they all close out at the same time, isn't it? Yes, that's using 165 as the last trade profit. Have I got these set up differently? Let me just quickly check. Portfolio mode is true. Portfolio mode is true. Yeah. That's an interesting... Okay, so that's an interesting logic issue. All three of these trades, these last three trades, closed out at exactly the same time because the EA is told to close everything at 2300. So it did. The logic in the EA says find the last trade and show me the profit for the last trade. All three of those closed at exactly the same time, millisecond wise, which means that one of them has picked up that and one of them has picked up that. God, that's an awkward one. I'll have to figure out a way to deal with that. This is what forward testing is all about. Finding these things. You'll never see this in the strategy tester. In the real world, obviously, in this case, it doesn't actually make any difference because it's going to use a standard lot size anyway, a standard risk based on balance. But yeah, that's a pain in the backside, that. How am I going to figure that out? I don't know. I'll figure it out. I'll figure out a logic. Right, so basically, let me just quickly show you the inputs. So the main differences we have are, we have that new data showing now in the display, which just shows you what's been going on recently with orders and last trades, next risk, etc. So people can see what the EA is going to do next rather than it just doing it and then people going, why did it do that? We have now also got a maximum amount of money risk. So for the lot multiplication system, the loss recovery system, basically, which increments risk. You can turn that on and off now. So there's an on and off switch for it. So if you don't want it to do that, it doesn't do it. Yeah, so you can just turn that off and it will just take whatever risk you have set, 1%, $100, one lot, whatever it may be. So if you turn that to false, it just uses exactly the same lot every time. If you set it to true, it uses a lot multiplier based on logic, which I'll explain in a second. There is also now what's called a portfolio mode, which is loss recovery based on any symbol traded. Now, what this does is basically it takes the last trade on any symbol rather than just the last trade on the symbol the EA is running on. So the way the logic currently works is it uses the DAX and it says, what was my last trade on the DAX? If it was a loss, do I need to use the loss recovery system? Yes or no? And it will calculate lots and work from there. With the portfolio mode on, what it will do is say, what was your last trade taken? Yeah, so the last trade was a profit. So it uses any symbol that the EA has traded for the loss recovery logic. So, and you can set now obviously a money risk amount as a maximum or a lot amount as a maximum. So this lot amount maximum only works if you're using lots. This money amount works if you're using percentage risk or money risk. So the way that the logic works with this now, which is different, is you can have this next risk amount automatically calculated to try and recover loss on any symbol you have traded, which is what portfolio mode is. So what I've found when I've been using it is we will have a situation where, for example, the DAX has had 3 losing trades in a row. Yeah, so it starts off with $100 in risk, then it goes up to something like 120, then it goes up to 135 or something, and it's increasing its risk because it's trying to recover its loss. However, while the DAX is doing this, the FTSE has had 3 winning trades in a row and banked $600, right? I don't need to recover the loss on the DAX by taking more risk and basically risking more loss because I've done really well on the FTSE. Yeah. So what I've seen when I've been using the EA, which you don't again see in backtesting, is that I've been sitting there with a day in profit of like that, and all of a sudden one of the instruments will jump in with a $400 risk, and I'll be like, whoa, calm down, I'm up 600. I don't want to risk 400 on this trade. The reason it's doing it is because the DAX has been losing. So it's trying to get its money back. I don't need it. I've got it back. Yeah. It doesn't know that. So the portfolio mode, basically what the way that it now works in this version is it will look at the last trade. And if the last trade is a winner and we're up on the day, it will take the risk straight back to whatever the default is. So if you want to risk $100 initially on a trade, it will risk $100 on the next trade. If you are up on the day, the last trade was a profit, and you've recovered yesterday's losses, if there were losses yesterday, there's absolutely no point in just trying to double up your risk or, 1.3 or whatever your risk multiplier is, because you had a bad losing trade on the Dow. If that 387 has been recouped by other instruments making profit, reduce your risk back down. Don't chase losses because we've got it back. Yeah. So that's what I've seen happening when I've been using it live. And what I've been doing is just manually banking. I've been using the portfolio dash to take a 50% profit or reduce 50% of the size. So I've been manually managing those trades. So the logic's been adjusted. So the way that the logic now works, if I can remember it, it's really complicated, is it basically, when it's ready to take a trade, what it does is it looks at the last profit. Let me explain non-portfolio mode first, right? So non-portfolio mode, the normal way it works, it goes on the DAX. Let's use this as an example. What was my last trade on the DAX? My last trade on the DAX was a 739 win. Yeah. So it was a win. Yeah. If we are up on the day today, which is a 0 at the moment, or we are up and the last trade was a win and our current balance is above the starting balance, i.e. we're in profit on the account, we're just going to risk a normal trade. Yeah. If the last trade on the DAX was a loss and we are either zero or in profit on the day and we are up on the account, we will keep the risk the same to try and recoup that loss. If we are down on the day, yeah, and we are down on the account, or one or the other, we will try and increment our risk to get that loss back and make a profit. Yeah. So that's the way the logic currently works now in the new version. And it's kind of the way it worked in the old version. But with portfolio mode, it repeats that cycle, i.e. looking at how is today compared to yesterday? Have we got that money back from yesterday? If so, and we're up on the account, let's not chase risk, everybody, and go mad, because we're going to run the risk of losing that. If we've made $600 today, for example, here, yeah, there's no point because we had a losing trade on the DAX in trying to chase it. So it's going to look at basically how today is compared to yesterday and the total account and decide whether or not to increase risk or to keep the risk the same or to reduce the risk back to the original level you asked it to trade at. So for example, for me right now, the account is 38K. So as you can see, the risk is 382. The reason the risk is 382 is because the last trade was a winner. Yesterday was a loss, but the account is in profit. Yeah. So we're not going to chase the loss because we're up. The account is in profit. There's no point in trying to recover this because it's not far away from the original risk. Yeah. If this trade was a losing trade, then it would be saying, okay, we were down yesterday and we lost on the last trade. So we've got some catching up to do. But because we are up on the account, let's not go mad. Let's risk the same amount as we lost. If we were down on the account, it would be saying, let's increment that risk and try and grab that back more aggressively because we are not only down yesterday, but the account balance is in a deficit as well. So we've got some catching up to do. Yeah. So it's quite important with this new version that you actually make sure that this starting balance is entered correctly. Because if you have that starting balance higher than this, it will be way more aggressive. If the starting balance is lower than that, it will be less aggressive. Okay, so that's basically what the new version does. So what I've been testing this for the last week and fine-tuning and tweaking the logic in it. What I've found myself doing, obviously you don't have to do this yourself, but I found myself looking at my overall P&L like last week towards on Friday, it was trying to get aggressive. And I was like, I don't want you to get aggressive because I'm up 3K on the week. So what I found myself doing was going into the inputs before the open and turning the loss recovery system, which should be set to true there, which there you go. There's exactly what I did. I set that to false. I forgot I hadn't adjusted it. Because what I wanted it to do was like, just keep the risk normal, please, because I've had a losing trade. I'm not worried about the losing trade because I'm up 3K, so don't go mad. Yeah, so it's something you can turn on and off. You can turn the portfolio loss recovery mode on and off as well. So if you're up on the day, but yesterday was a big down day and your account is down, you could say, oh, I know you want to take a bigger trade because the last trade on the whatever was a loss, but I don't want you to do that. You can flick these on and off and it will adjust the risk that it uses in there. Yeah. So although in back testing, you're only going to see the full automated version of it. Why is the last previous day's profit at 90? Oh, that will update in a minute. I hope it will update in a minute. Should do. Let me just check something. One sec. Yeah. So yeah. So as I said, there you go. 30-minute ranges in on the DAX. So I'm taking a short on that all along, whichever. So although you can obviously fine tune it yourself, you're probably going to find, obviously in the back testing, you can't do that. So it's just going to run in back testing, and it's only going to be using its own instrument. Whereas I think you'll find when you're actually using it live, you're going to want to sort of jump in and tweak it. So let's say, for example, today, this FTSE trade works out. Let's just have a look at where we're headed. Just going to move the partial up a little bit. So let's say, for example, this one obviously works out today. We get down to here. Yeah. It's going to take a profit on it. The profit will not recoup all of yesterday's losses. Oh, what's going on with this update? It's really slow. It won't recoup all of yesterday's losses, that profit. So the EA will be going, when that second trade stops out, on the New York session, it will be going, I've got some loss recovery to do, and it might should increment the risk slightly. I don't want it to do that, because if I can make back 300 to 400 of that on that short, and the trailing stop gets me out with about $500, I just want to reset my risk to normal. The logic will say we need to go a little bit more aggressive. So what you can do is come in to your US session, and on the NASDAQ, the Dow and the S&P, is you can just turn off the loss recovery system for today and then turn it back on again tomorrow. Yeah. So it's a lot more flexible. I understand it's probably going to add an extra level of confusion, but it is what it needs to do and the way it needs to do it. And I'm going to say to people, obviously, if you don't want to use a loss recovery system and you find it confusing, don't use it. Turn it off. And I've got a switch for that. You can't turn it off at the moment in version 3.02. So I've put that switch in there to turn it off. If you don't want to use loss recovery, that's fine. You can do loss recovery manually. Yeah. So if you go in on the DAX this morning, we go short, and the FTSE, we go short. They both come up and they both stop out. They both take a 700, in my case, dollar loss. What I can do is on the NASDAQ, the Dow, and the S&P this afternoon, with the loss recovery system turned to false, I can just up my risk to 1.5% on those. Yeah. And I will do the loss recovery, i.e. get more aggressive myself manually by just adjusting my size. Yeah. So it all depends how hands-on or hands-off you are as a trader, and how you're going to utilize the tool, basically. So, but that's basically what the new version does. Okay. So, I am going to do a video on the new version when I push it out, and it'll probably be out next week. Although I can push out this version maybe to you guys. That might be a nice idea, because I'm away at the moment from Friday until Tuesday next week. So what I might do is I'll get the licensing system built into this version. So any of you guys that have got the ORB EA, obviously you can have a play around with version 3.04 and bug fix it for me. So test it out maybe tomorrow. If I can get it out over today, I'll try and get it over today or tomorrow. And then, yeah, you can test it for me Friday and Monday, although the market's going to be probably crap because it's shut in the UK. So we'll see. Afternoon, morning even, let's check. How we doing? Right, so that's the new version of ORB. That's all covered. So it's obviously the loss recovery system is the main focal point of that, and I've been fine-tuning and tweaking it. It's very complex for a reason, because it needs to be complex to work out how to recover losses. It is going to change backtest results as well, because the new loss recovery system works in a different way, because it uses yesterday's profit as part of the algorithm now. So it's using your balance, your profit from yesterday, your profit from today, and either your profit from every symbol or from individual symbols. Again, it's very configurable. You know, and this is the thing. I like to make my products configurable because I am a trader and I like to tweak them. Everybody else wants to just basically stick it on a chart and become rich. It's not that type of product. But it does allow you to change it on the fly. Yeah. If everything's going well, right, and we're getting decent movement at the open, and every day we're getting clean breaks, which is making a little bit of money, you can leave the loss recovery system in place and just let it do its thing. If it's becoming really choppy and we're getting multiple stop outs, you may want to intervene and start to adjust the risk manually. You've got that ability now. That's basically all I've done, is added flexibility into the settings. We are pulling back a little bit on the open. We'll see where we go. Right, breakout strategy. So I'm just going to quickly cover this and what this is doing. This is my kind of next project, which I'm in live testing. I've got this running on 2 accounts at the moment. This account, which is a very small account, is running the new development version. My bigger account that I'm trading with at the moment is running the previous version, which is, I wouldn't say it's more stable. It's this is testing new logic, so I don't want to put it on that account in case it goes wrong. But it's on a live account. This is still on a, I think it's 1500. I don't know how much is in this account. 2 grand now. Yeah, it was 1400. This account. It's now 2 grand. It's up 825. Look. So this is running on a Robo Forex Prime account. What this strategy is doing, and this is what I'm going to be working on as my next kind of main project, is very similar to ORB. I've gone through it a little bit before, but I'm going to do a little bit more of a detailed explanation as to what it's doing. So what this does is it, at a specific time of day, it starts to monitor the market for volume spikes. And because we can't use volume as a usable instrument in CFDs, because there isn't a centralized volume, it's just your broker's volume that you're seeing, it uses ADR multiples. So what it's doing is it's waiting for price action to be big. Yeah, so here we go, Euro Swiss, we've got a trade on at the moment. We've got one on oil and on gold at the moment. So let's look at this one here. So what it's doing is it's basically waiting for a, if you like, a propulsion gap to form. It's not, it doesn't monitor propulsion gaps in any way, shape or form. It just monitors ADR. So it's looking at the ADR and it's saying, right, when we get a move which is bigger than X ADR, which is similar to how ORB works. So 10% of the average daily range. If we get a move that's 10% of the average daily range or more, yeah, we are going to wait and see if it pulls back slightly, and then we're going to bracket that, and we're going to take a breakout. So what we're saying is it's a breakout continuation, EA. So it waits for the breakout to happen, i.e. an ADR move, a propulsion move, an impulse move, whatever you want to call it. It's a large move in the market, which is bigger than the average of an X% of ADR. And then we bracket that. What typically will happen is it will either become a move, in which case we'll ride it, or it will be a fake out, in which case it will reverse. Yeah. So what we're doing is we're saying, when you've put some volume into the market, I'm going to either go with you if you're going, or I'm going to go against you if you don't go. Yeah. So it's taking a breakout of this impulse move. So what most people do when they see this, and this is what all the ICT people try to do, is I'm going to take a retest or that type of price action. So they wait for it to pull back, and then they try and take a price action down here to try and get a better entry, which is fine, but they will fail a lot, because a lot of the times it will be a false breakout and it will go the other way. So you just get stopped out. So what this does is it just brackets that range. Let me just see if I've got a pending running at the moment. No, we're in trades on all of them, aren't we? Yeah. So we're in trades on all of them at the moment. So what it does is it monitors for a percentage of ADR. When it finds that movement, it then puts a bracket order on it and waits for 30 minutes. If nothing happens in 30 minutes, it cancels those off and goes, I'll have another look later. If a impulse move happens within that 30 minutes, i.e. a push, pause, and continuation or reversal within that 30 minutes, it takes that breakout. It will then cancel off the opposite pending order. So you can see here we've got, that was what was bracketed there on Euro Swiss. Let me zoom in so you can see it. So on the Euro Swiss here, it was that move there. Yeah. So those three candles, that 15-minute range was more than 10% of ADR or whatever I've got it set to. Can't remember actually. I think I might have it set to 15. I'll check in a minute. So we had a pending order and a pending order. It then pulled back inside for 10 minutes, came back down, and then it triggered a short. The opposite side of the order gets cancelled off straight away, because what we're doing is we're saying, right, you have not broken out to the upside. You look like you're reverting. So we're not going to take the breakout, because the danger is you bracket and all that impulse move is the start of a range. Yeah, and you're just going to take a loss followed by a loss, a double loss, and you sit there and you just take losses. Yeah, so it doesn't do that. So it's taken that short there, and now what we're doing is we are basically placing a stop loss, and we're saying, right, we're expecting you to pull back and continue. Yeah, so what we're looking for is market structure to start and then continue. Yeah, so do that. Okay, it's got a trading stop mechanism. So what it will do is when the trade starts to work out, it will automatically cut risk. Yeah, it will reduce that risk down and gradually meaning that you basically get to a break-even point if the breakout works. So the idea of this is, what we're doing is, and the way that I am using this is, and this is what I've been doing for the last 6 weeks or so, since Trump started breaking everything, is I'm using, trying to find, I'm using 15% of ADR at the moment, and then I'm trailing it with 20% of ADR. So what I'm looking for the market to do is like this, to break out here on oil. When it's moved 20% of average daily range, I start to cut risk. And I'm looking basically for a breakout continuation. This is what we're getting a lot at the moment. The market is moving fast and hard. Yeah, like this. And then it's pulling back and it's putting these big days in at the moment. Yeah, and this is what this strategy is designed to do. So it can't time when it's going to happen. But what it can do is identify that it's started. And this is all the EA is doing. It's identifying propulsion and saying, right, looks like we might be starting to move here. So let's get on it if we can. And let's hold on if we can. Yeah. Now, the logic in it basically has a risk reward system. So all we're doing is we're saying gold is obviously up in the sky. So as you can see, I've got a risk reward running at 3R. That's it. So I'm basically looking for, if you think about what we're looking at here, we're looking at a 15% ADR range as a minimum. So I'm looking for a 45% of ADR move. So I'm looking for half an ADR's worth of movement out of a breakout. That's it. Yeah. So I'm not looking to get in, hold, and carry on sort of forever on it. I'm seeing if we can grab half an ADR. So all I'm doing is saying, let's start monitoring the market at 8 o'clock-ish in the morning. When we get 15% of ADR put in, see if you can get on a breakout if it happens, and see if you can grab half an ADR out of that move. Yeah. So half an ADR on top of 15% of ADR means that we're not even looking for 3/4 of the average daily range of movement before we're out of that trade. Yeah. So that's all it's doing. So it's a very simple breakout strategy using standard risk reward, but it's obviously cutting that risk down. So if this break now on oil starts, or on gold here starts and fails, so it gets all the way up here and then it doesn't work out and we start to go into a range, I'm cutting the risk so that we take a lot less loss on the trade. So it's not static. It also has a loss recovery system built in, meaning that there's 2 loss recovery systems built in. First one is the standard lot increment. Yeah, so the next risk is going to be $10. The last closed trade on this was $9.24. That's including commission because it's a prime account. So yeah, we're taking a standard $10 risk. If we start to take losses, I'm just trying to find an example. Here we go. Here's one. So euro pound there, for example. Oh, there's 2 there. That's great. So euro CAD there, we took a $17 loss. Or did I put this in pounds? No, this is in dollars. It's on RoboForex. So it took a $17 loss. Yeah. You see there on the Swiss yen, there's an $18 win. That was not a TP. Yeah. And that 1788 loss there, that 1938 was not a TP. That was a TP, the $33 win. But what this one was is an automatic loss recovery. So the way that the EA logic works is when it takes its breakout, it's analyzing what the last trade profit was. If the last trade profit was negative, like this one, great example, $9.63 on the DAX, if any trade that is running, any trade at all is running, gets to twice the last loss, in this case, $18, $15, $19 or whatever it may be, it auto closes 50% of that trade to recover that loss. And then it lets the rest go for a runner. So basically what we're doing is, because we're trading so many instruments, we don't know which are going to go. Yeah. So we're looking for something to start, and then a lot of them are going to fail. You see, there's a lot of losses in here because it's a breakout strategy. The strike rate's only going to be 30 to 40%. You're never going to get more than 30 to 40% on a breakout strategy. Yeah, because the market spends 80% of its time in mean reversion and range bound. So breakout strategies don't have a high strike rate, as you can see by the P&L. So what it does is it automatically recovers whatever the last loss was as soon as you get to double that loss. Yeah. So it means that your P&L throughout the day will be flip-floppy. And then either a news event will happen or a market move will happen, and everything will start to move, and it suddenly just goes boom, and it banks target. So the EA itself is running on one chart, but it monitors all pairs. You can set up what you want to monitor, but it has a targeting system, so a daily close. And what it does is, in this case, because this is a small account, it's only a $1,400 account, I'm saying if you get to $125, which is 10%, roughly, close me out. Yeah, and just stop for the day, finish. Yeah, so the idea of the strategy is it sits there all day long waiting for something to happen. When something happens, it just takes the money and banks it. That's it. But along the way, it will be making lots of little losses, lots of little wins, and keeping your losses recouped throughout the day as much as it can. Obviously, it doesn't always work that way, but as much as it can, and basically just grabs those big moves when they happen. So it's a very simple strategy, but it's using diversification. So you'll see what I'm running here is pound US, Swiss yen, Euro CAD, Aussie US, Euro pound, Euro Swiss, Aussie New Zealand, NASDAQ, gold, oil, and I'm also running the DAX and the FTSE, the Dow. So DAX stock index, gold, and Swiss safe haven, yen safe haven, and again Swiss safe haven. US indices, the two that are the least correlated. I'm not trading the S&P because it's virtually the NASDAQ. Euro against CAD, which is commodity. Australian and Australian New Zealand commodities crossed with the US dollar twice. I'm trading the pound twice and the euro. The euro is actually traded 3 times, but it's running against the commodity, which means that the Euro Swiss and the Euro CAD will move completely independently and actually are inverse a lot of the time. So it's got those running for diversification. So we're covering the commodities markets, the metals markets, the stock indexes, the safe havens, the US dollar, the euro, and the pound. and we're covering commodities again with Aussie New Zealand. Yeah, so I've got stuff that is going to move not an awful lot during the UK session and not a lot during the US session. I've got stuff that is going to move a lot during the UK session. I've got gold, which will move whenever the hell it wants to, the same as oil. And oil will move independently more on Wednesdays with the oil figures coming out. We've got these two that open in the afternoons. So we're going to get the volatility coming through in the afternoons. And if there's a safe haven run, we're going to get on that as well. So it doesn't matter what market moves, and it doesn't matter what time of day any market moves, we're going to get on something that's going to go. Yeah, that's the whole principle of it. We're using a portfolio shotgun approach to say, right, grab me stuff that moves, because that's what the market is at the minute. It is just parabolic when it wants to be parabolic. But if it's going to sit around all day, what we're going to do is not a lot, because if we're sitting around doing nothing, we have got no movement. If we haven't got 15% of the average daily range being put in a 3 15-minute candle range or 3 5-minute candle range, we just sit around and do nothing all day. Yeah. So, and again, this can all be fine-tuned. At the moment, I'm using 15%. And again, it's something very, very difficult to backtest thoroughly. Even with MT5, it's hard to do this logic and backtest this logic. But the whole idea of it is it's trading the way that I trade, which is why I've built the portfolio dashboard. Is if I see my P&L down here sitting at minus 20, and I've got something here sitting at 20, I'll close half of that out to make sure that I've reduced that loss by half, and hope that runner goes to 3.5R and banks another 20 on top. Yeah, but what it's doing is it's just keeping on top of your account and balancing it all day when stuff's moving. But because we, at the moment, even more than ever, we don't know what's going to move, because markets are being upset constantly and changing their mind constantly. We just get on whatever's going to move whenever it's going to move, and it doesn't matter what it is. I have been running this without a 3R on it as well. So what I have been doing is setting this to an ADR, the target. I think at the moment it's set. Yeah, 0.45. So that's the half ADR I'm looking for. Yeah. So so I'm saying basically, including the range you've just done to create the range that we're going to trade, we're looking for 0.6 of an ADR of movement. It's going to do that easy, isn't it? It's very rare you'll find the market won't move 0.6 of an ADR at some point during the day. ADR obviously is a lot less, but 58% of the time we are definitely going to be achieving those ADR figures, which means that pretty much 100% of the time we're going to achieve 60% of the ADR, aren't we? So that's basically all it's doing. But if you set this TP to be 1 ADR, i.e. miles away, what I have found is that you can get some very big profit days, because at the moment when we're getting this sort of movement, you get it all. And because we're using a breakout strategy, and we're using pairs which are uncorrelated, or instruments which are uncorrelated, they tend to move in either in the same direction or in opposite directions at once. So when there's a Trump announcement, oil will do that, DAX will do that, NAS will do that, pound US dollar will do that, euro US dollar will do that, the Swiss franc will do that, or whichever one. If you're trading euro Swiss, obviously the euro will drop against the Swiss. But what you get is a common denominator of everything moving. Those days where we get those movements, you can bank 3, 4, 5 times normal profit, so 20-30% days. Because what happens is, because we're in a breakout strategy, if you've got pending orders sitting there and you've just triggered one, or you're just waiting to trigger one, you will get on that move. So some days I've had sort of $300 days go in. I've also had $200, $300 loss days go in. You know, so it is a bit swingy, obviously, but look at the results. But 58% in one. I mean, realistically, that was only one day. So 2 weeks. 58% increase on the account. And this is trading with a $10 risk on a $1,400 account. Yeah, risk is tiny. Very small risk. It's less than 1% risk per trade to generate a 58% return. And that's what I've done on the big account as well. I've done more than that on the big account, which is what I was showing a couple of weeks ago. So it's in development still, but what I kind of want to see with this, and I'm waiting for, is the market to have a few days where it does nothing. Yesterday and the day before, as you can see by the P&L there, it made 2.5% day before yesterday and 0.74 yesterday, because look at the days we had yesterday. The market was flat as a pancake, wasn't it? Yeah. Compared to what we've been doing. Yeah. So it's actually on the days where we've had no movement, it's done pretty well. You know, I say no movement, it's still, you know, if you go back 2 weeks ago, that's 200% of ADR, isn't it? But it's still, in comparison to what we are seeing, a fairly quiet day. So I'm trying to, and this is the stage I go through with all live system development when I get to live testing point. I'm trying to break it. I'm trying to disprove the back tests, if you like. I'm trying to make sure there's stuff in there that it's going to go wrong on, so that I can identify it and see if there's a fix for it. So far, as you can see by the P&L, it's not finding anything. I just wanted to run through how it works, basically. My plan is to couple this strategy with a mean reversion variant. Yeah, so it will be a similar principle in the fact that it will trade non-correlated instruments with a daily profit target, but it will do mean reversion. So things like Bollinger Band, or if we get an ADR, I will probably use ADR rather than an indicator, because I'd rather use price action than something that's tweakable. But something like, if we get within half an hour, if we get a 50% ADR move in half an hour, we're going to look for price action signals to mean revert that. Yeah. So what will happen is this breakout strategy will be coupled with a mean reversion strategy. So when it's broken out, we will be either at break even, or we will have taken some profit to bank against some loss. And it will then either continue to do that and hit the target, or it will fail and make virtually no loss. But what I want is a mean reversion strategy to also attempt to trade the mean reversion of it. So when the breakout strategy is struggling, the mean reversion will pay for the struggling breakout trades. Yeah. And if you can run it all within one dash like this, you can monitor this and just basically just keep banking one against another. Yeah. So, you know, this is why this dashboard was built. I've got a $2.17 loss there and a $4.08 loss there. Close out 50% of both of those, I bank money. Yeah. If you've got a breakout strategy running alongside a mean reversion strategy, and you can monitor it all on the same P&L, if you like, on the same trade portfolio dashboard, while it will do a certain amount of the automation for you, what I've found myself doing is just banking money constantly, because you see money being presented to you. This thing, the DAX right now, is dropping. Yeah. So if this DAX suddenly collapses down and it gets to, can't see behind my head there, 0.3 ADR, for example, and the Euro Swiss sits around like this, and oil sits around like this, and gold sits around like this, I can close that DAX out at 0.3 ADR at £20, for example, shut that, cancel each other off, and just wait and see what happens on oil. Worst case scenario, oil's trade is not going to make as much loss as the profit I've just made on the DAX. You can't lose. If you're coupling a mean reversion with a breakout strategy, the market is either doing one or two things, isn't it? It's range bound, therefore we're not taking breakouts and we're not taking mean reversions, or it's moving, in which case we're on it, or we're waiting to get on it. And as long as it moves, you shouldn't have an opportunity where you can't make some kind of money on it. So this is kind of stage one, if you like, of the new strategy, where I'm coupling the breakout, where I'm developing to the point where I'm happy with the breakout strategy. And then it's literally a case of swapping the sell and the buy buttons around. Yeah. So after it's gone up, we're on the breakout, get ready to send a pending short. And we'll only get in on a pending short, obviously. If it continues to go, that pending won't ever trigger, will it? And if it does trigger and it then continues, your breakout pays for your failed mean reversion. Yeah, it's a no-lose situation. But it all starts with a breakout. So it has to be, we have to have broken out before we start looking for those mean reversion opportunities, which means that the obvious vehicle to do that with from an instrument perspective is ADR, because we wait for a 15% or a 10% or a 20%, whatever variable you want to use of ADR. And if it hasn't done that, we will never take a mean reversion trade, because you can't mean revert if there is no movement. Yeah. So this cannot be mean reverted. It hasn't gone anywhere. This can't really be mean reverted yet. That can be mean reverted because it's done a decent distance of movement. Gold is now taking off. Yeah. Do you see what's happening with the P&L? Look. It's not going into drawdown, but it's not going much into profit, because we're trading uncorrelated instruments, which are at the moment struggling to get started. If all of a sudden gold takes off, that won't affect the DAX, and it won't affect oil, and it won't affect the Euro Swiss. If the Europeans announce something today that is negative, it will dump the euro, but gold won't get affected. The DAX probably will, but oil won't get affected. If the US or the Saudis announce something about oil, oil will move. Gold might move if it's a worrying move, but you won't find anything moving on the DAX or the Euro Swiss because they've got absolutely nothing to do with that. So we're just literally waiting for something to happen in some market for profit opportunities to arise. But if nothing happens, we do nothing. So yesterday, you can see yesterday's trades here, the 15th. 1, 2, 3, 4, 5, 6, 7, 8 trades all day. The 14th, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, and it will go on. Yeah, trades. But it still didn't make a lot of money, but it didn't lose because we're using positive R. Yeah, so there you go. So there's your lock-in. So that gold trade is a no loss, cannot lose. Now, that is either going to go or it's not. Now, if it goes up to here and then it doesn't get to target and mean reverts, we will take a small win on that. The mean reversion strategy will get in on the short in case it's a false breakout and it's going to continue back to the downside. Yeah. So you can profit from both directions, which should speed up the time we get to bank. So, yeah, right now we've got an opportunity to bank virtually nothing. It's 0.5%, isn't it? I'm not taking 0.5%. But so, yeah, so that's what I've been working on, which is why I've been struggling a little bit with getting things done with the ORB strategy and other things, because I've literally been milking this strategy for weeks. But I'm concerned it's because of the current market movement. I've back tested it on individual pairs and it holds up, which means that if you combine that into a portfolio approach, it will win. Because if it holds up on its own without making a loss, what you need to do is combine it with other things moving at the same or similar times to bank daily profit. Don't forget, the whole purpose of this is to bank 10% a day, roughly. That's its target. It set a target and says, when you get to $125 in profit, stop. Don't do anything. Just shut everything down. Well done. Yeah. If we go into drawdown, stay in drawdown and increment the risk until we get a move. If we get no move and it's a choppy day where, and this is the only Achilles heel in the strategy, the days where it goes like that all day long, but within 20% of average daily range, those days it does struggle with. Because we're going, oh, we've got a distance of movement that we can take a breakout on. It's failed. Oh, we've got a distance of movement we can take a breakout on. it's failed. Yeah. So on really tight days, it's fine. On days which is kind of rotational with fairly decent volume, it struggles because it's a breakout strategy. Yeah. That's not going to make money, is it? Same as ORB, doesn't make money if the market doesn't break. So there's fine tuning that can be done on it, specifically with size of range. So I'm using 0.14 at the moment because I'm basing it on ADR, which is based on ORB's backtesting and robustness testing results. So I'm using the same with this at the minute, somewhere between 15 to 20. 20 will give you less trades, but means you've got more strong price movement. So you get less stop outs basically, but you will find it harder to hit target. So there's pros and cons for all the different settings which I've tested. So anyway, I'll update you on it. And again, this is something I'll probably try and get out for you guys to forward test for me. And sort of trial it out basically for a week or so and see how it goes. But I'm at the point where I've got some work to do on logic on it, which I've identified areas where it suddenly goes, I'm going to reset the risk. And I'm like, no, not now. This is where you want to ramp it up. So I've got to put some more logic in there to a little bit like the ORB, to be a bit cleverer, if you like, and do more of what I would want to do in a situation I'm in. But it's close. So and there's other tweaks I want to test as well, but they'll probably be sort of version 2s and things, obviously, which I will develop. But it's the first, apart from ORB, it's the first real solid stop loss strategy that I've actually found an edge with. But on their own, they won't stand up. If you go and back test this strategy on gold, for example, you won't get a great result. But it's not about getting a great result on an individual instrument. It's about getting a portfolio approach to breakouts. And that's where this is making its money. It's not making its money now because gold is breaking out. On gold, this trade will work, but only 40% of them will work. When you put it in the back tester with a trailing stop, you'll find that you get that zero-sum edge where you come back to, at some point, roughly what you started with. But because you're trading multiple uncorrelated, diversified instruments on a daily basis, that profit curve, that equity curve that doesn't make money on one instrument gives you an opportunity to, instead of letting that run to TP, you would have banked it there, because that one and that one together made a target. Yeah. So it's got to be run as a portfolio, which again is going to confuse the hell out of everybody that sticks in the back tester and goes, this thing's crap. Not crap. It's brilliant. It's just you're not using it right. Yeah. You've got to understand how the edge of the strategy works. It works on portfolio, not on individual instrument. So anyway, that's basically what I've got bubbling at the moment. DAX is struggling, isn't it? We're at the Globex low. Globex, not Globex. It's the last hour's low. FTSE's all right. There we go. So, taking a loss on the DAX. Didn't see that. So DAX has stopped out. Unfortunately, FTSE is about to take a partial, which pays for that. You watch. The reason I've moved my TP up today is because of that. So what I'd like to see is a close there and then pop, not a pop from here. See, again, this is monitoring the dashboard, and this is what I'm finding while I'm doing this. Monitoring the dashboard, I'm looking at the DAX now and that FTSE trade going, I've got an opportunity here, and this is where your discretion comes in. I've got an opportunity here to shut the whole lot now and bank 300 on the day. Yeah. And that is possibly the right thing to do now. We don't know. It might be that right now the best thing I can do is shut that, because what it's going to do is that, and it's going to stop me out. And if that's the case, that's the case. But the decision-making process that I have is, I'm down 500 yesterday. I've had a losing trade today. I'm down 980 on the week, and I've got 650 there. So I can close that out to pay for 2/3 of that, get the day back into profit, but I haven't recouped yesterday's losses. So what I can do is do that now, get myself back to a point today where I'm in profit, and hope this afternoon is volatile. Or I can let this run, hope that this drops down to here and closes out a partial with a very big downward candle, which closes half of that, or 75% of that, which brings that into profit, pays pretty much for the entire week's loss, gives me a runner, and the afternoon is volatile. Which of those is going to happen? Which is the right thing to do today? This is trading. This is the decision-making process that you have to go through on a daily basis. So my decision-making process right now is comfortable. I'm up 6.8 on the month. So I'm going to let it run. If I was up 2 on the month and I'm struggling, I might close it. But then you might say, well, if you're only up 2 on the month, you want to let that run and hope you get a big one. Yeah. It's all down to how much money you're making, how your day is going, your week, your month is going. This is what the same as I've covered in the bootcamp about position trading. Whether you close out a trade or how you manage your portfolio, whether you do drawdown control or not, whether you get aggressive drawdown control on or not, has got a lot to do with what your P&L says, not what you're seeing on your chart. Because you've got the emotional side of being attached to the money, which is going to affect your decision-making process. And that is never going to change. We're human. We will remain human. Leon, the breakout strategy will really help someone like me to build up a small account and eventually use the capital to diversify into position trading. Yeah. But it is high risk as well. So, you know, anything that uses a stop loss, as you know, probably, is high risk because you're going to get stopped out a lot. Being stopped out a lot leads to emotional decisions like system hopping. So if you start any strategy with a stop loss and it has 5 losing trades in a row at 1% risk, you're down 5% on your account, your entire being tells you to scrap that and move on to the next thing. It doesn't tell you to sit there and wait for the next 3 trades which come in at 3R and make you 4% profit or whatever. Yeah, it's a numbers game. This is. You're going to take 100 trades, 40 of them are going to be winners, or 30 of them are going to be winners, 70 of them are going to lose. It's going to do things like this, where it's going to put a spinning top in at your partial profit line, not close the order, and scare you. What do? Everybody's different. I'm taking a partial. There you go. So I'm back to pretty much break even on the day. I'm going to see if I can get something out in New York this afternoon, which means I'm also going to move that partial line down now because I've done my partial manually. So I'm going to adjust my target to the origin of that move and see if we can retest here. I'm just worried about coming off of this. Look, the buyers are going to be stepping in, aren't they? There you go. So that would not have closed out my partial, you know. And this is the whole thing. You know, somebody yesterday said to me, I can't watch the charts. I need something I can put on the charts that just makes me money. That is what you have to do if you want to do this job. You've got to make these decisions. Yeah, probably going to be the wrong decision. It's going to collapse and hit ADR to the downside today. But, you know. So, yeah, I mean, that breakout strategy, obviously, you need to be aware of, obviously, the risks involved. It is a fairly high-risk strategy. There you go. Gold's about to TP. I don't want a TP. Things going parabolic. Blimey, we're out, aren't we? Where the hell? Okay, this is all-time highs. So, yeah, screw it. In fact, get rid of the take profit. Run it. So we're down 10. So when that hits 20, hopefully you'll see this in action, right? So when that hits 22, it will automatically shut half of that trade for me to recoup that Euro Swiss loss there. If it hits 22. But if it doesn't hit 22, it's going to trail out and bank 10, which is going to pay for that anyway. Yeah, this is the beauty of the strategy. And this is what it does. It flip-flops up and down. You take a loss, but because you're taking a loss, it means the market has moved in one direction. Because you're trading opposite correlated and diversified instruments, typically when something is stopping out, something else is going. Because one of those instruments, either the Swiss franc or the euro, is pushing or pulling. You will probably have another instrument pushing or pulling in the opposite direction at the same time, which means that there's usually one thing going into decent profit as one thing goes into its stop. And this is where the edge gets applied by cancelling out. When you get multiple things push at the same time, you only need 3 or 4 trades and your target's done. Next risk is going to be 12.90 because we've taken a loss. So anything that is setting up now is setting up at a higher risk, ready to try and recoup that loss faster for me. But if this trade closes that out, that will get reset back down to normal risk levels, because I don't want to push it if I've won. If I've had a loss, I've recouped the loss, and I have a runner, I don't want to push the market. Don't want to take unnecessary risk. Yeah. So it's dynamic. The sizing based on how it's going today. How's your day going? I keep saying it all the time, don't I? Your decision-making process is made. How's your day going? How's your week going? How's your month going? Really well. Right. Let's go for it. Let's get some risk on. Yeah. Or let's take our foot off because we're just making money with no risk. It's too easy. If it's too easy, carry on doing what you're doing. If it's not working, you need to adapt. This is what the EA does, and this is what the new version of the ORB does, a lot more than the old one. The old one does it as well, but the new version is even more dynamic in the way that it monitors how your account is performing. And a lot of people will tell you in courses, if you're on a bad run, reduce risk. For me, that's totally the opposite. If I'm on a bad run, I need to recoup that loss. Yeah, because if you're on a bad run, statistically, you're likely to get a good run start, because bad runs don't last forever, do they? So you know that if the market is not suiting your strategy, at some point soon, it's going to suit your strategy. So if you're trading a breakout strategy and it's going sideways, it means it's going to break out soon because it's accumulating. Yeah. If you're mean reverting, yeah, and your strategy is losing, it's because it's going parabolic. The more parabolic and stretched it gets, the faster it snaps back. So you want to up your risk because the probabilities of your trades working are higher than they were when you started losing. Yeah. But a lot of courses will teach you the opposite. If you're having a losing week, reduce your risk down. What? So that you lose slower? You're still going to lose. So if you are going to continue to lose, let's up the risk so that when that winner comes in, you grab it back. But don't go obviously mad. You're not martingaling or anything stupid. It's loss recovery. It's not. It's just being more aggressive when the probabilities are higher. It's the same as ADR. Yeah, it's the same principle, I feel. Yeah, when we get to ADR, the probabilities of hitting that level are 42%. When we get to 125, the probabilities of going beyond that are 23%, which means that there is more probability of that happening. So do I want to get less risky up here or more risky? For me, it's more risky because there's a probability of that happening being higher. When you get to 150 ADR, the probabilities of exceeding that go down to 12%. There's an 88% chance it's not going to go beyond that, which means it's either going to go sideways up here, it's going to flag, or it's going to reverse. So what's the probabilities? What risk should you take when you get to 150 ADR? Same as when you got the probabilities of 58% of success or 88% of success. If my success rate is going to be 88%, I'm going to get in on it. Yeah. If we hit 200% of ADR, double it. And if it stops out, you double your loss. But then you get into 2% chance. Have another go. But, you know, it's obviously you need to understand the reason why you've hit that. Yeah. If you've hit that because the interest rate has just changed and it wasn't predicted, yeah, you don't get in aggressively. You get in super small because this thing could never stop. But if you're just trading a normal day and this is normal price action, you get to 150 ADR, you don't get in small, you get in big because you're going to make more money when it actually works out. And if it comes down, you know, like we say, climb up the stairs, fall down the elevator shaft. If you've got a falling down the elevator shaft with 2 times the normal risk and you can get that to break even and it pulls back and continues, that is a mortgage payer. Yeah, so I don't agree with the, and I've done these courses. One of them is actually one of the mentors I used to trade with. I point at him because I'm in his Discord group. Kunal Desai from Bulls on Wall Street. That is one of his, part of his course and part of his methodology is if, I can't remember what the actual rule is, but he's got a rule set basically. And one of the rules in there is if you've had X losses, you either stop for the day, which makes sense because your strategy's edge is not playing out, or you reduce risk. But for me, reducing risk and then having 3 winners in a row that does not recoup those losses is worse fundamentally for my psychology than it is if I'd have gone in with more risk and got that loss back quickly. That is your pleasure sensor and your P&L rewarding you for sticking with the strategy and working hard on it. Yeah, rather than reducing risk and accepting defeat. That's the way I see that. But it does work for him because he has a very high risk, high reward strategy. Yeah, he's getting on high cap stock that you can get, you know, $3 of movement a day out of. If you're sticking $100, $500 down on those 3-4 contracts, yeah, I get where he comes from with that. But this is not stock trading. This is diversification, different thing. So anyway, so there we go. That's today's session covered, really. 9:23. That's not bad, is it? An hour and 20 minutes. Might be the right choice, that exit, but we'll see. So out with the partial so far, runner on. And we'll see if we get further runner on it. I'm just going to actually get rid of the risk as well. So I'm just going to lock that second half in. There's no point in taking a loss on it. So it's either going to be a market structure continuation today, or it's not. If it's bouncing off of these lows, which we previously saw, it's probably going to rotate. Don't forget, we've got big news today. So there's a good chance that the market's going to be sitting around waiting for the interest rates and retail. So it may be that we are just going to go into rotation for the day until here. So just I'll be on this afternoon anyway. I'm streaming the New York Open. So we'll obviously watch the Canadian, but that is coming out 15 minutes after market open. So be very careful with the open this afternoon. Might be one of those sideways opens. If it's got low volume, it doesn't affect us because the ORB won't take any trades anyway, will it? So it'll be sitting there kind of flip-flopping, doing nothing, in which case we're not trading anyway. And then if we get a massive move on the indices, which we shouldn't really do off the CAD interest rate, but you never know at the moment. Obviously, we'll be able to take those 30-minute ranges if they're not too big. Any questions on anything? Hopefully I'm not too delayed and I'm going to wrap up and then someone's going to say, just as I go off. But I'm going to be working on that and obviously OLB, and I will try and get licensed version of these is out into the group for testing. This one's not ready yet. but the ORB new version, just so you can maybe forward test it over the next couple of days. I might push it out as a release anyway, because as long as it works today, although I have just found that little bug. As long as it works today without that bug of those three closing at the same time, it should be absolutely fine anyway, and usable as it is. So I haven't managed to break it anyway. Doesn't mean it can't be broken. But there you go. So just before I go, so there you go. There's that last trade profit, that partial that I just closed. You can see that the net risk amount is at 442, which is a lot increment. The reason it's saying 442 is because we are down on the day. We were down in yesterday as well. So what it's saying is we need to recoup some loss. Now, if this suddenly closes down there, it will still be at that point because it hasn't got back all of yesterday's losses. So at that point, that is where I, as a human, oh, here we go, I'm going to stop out. Just had some news hit. So it looks like we're going to take long breaks. Platform's frozen. What that was, but we've just had some news hit. China wants US talks to address concerns on Taiwan and sanctions. We got something coming in. This terminal is totally frozen. What is going on? That's working. Oh, there we go. Not quite sure exactly what is going on there. That all just completely locked up on me. Oh, hello. Okay, this is my VPS. Just shut that down a minute. Try and log back in. Okay. Right, so there you go. So I mean, that's just suddenly banked 140, 1.4%, obviously, because that's hit. That's just stopped out on its trailer. That's going to stop out that DAX. That's unfortunate. Oh well. Can't do anything about that. News. Can't remember what I was saying now. It's totally thrown me. Yeah, so loss recovery. So obviously next risk amount there, 1442. It is going to, I'm pretty sure it's going to stop out that DAX. I might not do, might get a sudden pop. But there's a chance that we might make a loss on that, which is going to be unfortunate. It's going to ruin the day. Ruin the morning anyway. But that will remain the same because we are still down yesterday. So we are still trying to recover loss. Yeah. So this is the bit where if this trade works out, for example, and it gets up to like $400 of profit today, I will say, I will call that, yeah, all right, we've got back yesterday's loss. So I don't want to trade at that level. I want to trade at normal risk. So in that case, I would go over to my Dow, my S&P and my NASDAQ and turn off the loss recovery system for today. And then that will automatically adjust that back to 10% risk or 1% risk. Yeah. So there's a good example of real life, how you adapt by just changing it depending on what's going on day to day. This is the type of logic I've been trying to build in to the EA into my EAs and to my trading all along. But as you can see, the decision-making process is, there's always discretion involved in it. I can make 1,000 different rules for logic, but I can't give you 1,000 different inputs so that you can choose the one that suits you the day. It's going to change all the time. So I thought the easiest thing to do is to give you an on-off switch and teach you how to use the on-off switch. And then, you know, you're flicking the switch yourself, aren't you? If and when. If you're happy, even though this stops out and when this stops out, I mean, I will leave it at that if it stops out. But if you're happy, even if this makes $500, for example, and undoes yesterday's, and then it will stay there because it's still in loss recovery mode, if you're happy for it to trade at that, carry on. What's the worst thing can happen? New York could kick off and you could make very nice big profit. Slightly bigger. It's not much bigger, is it? Look, so normally it's 382. It's 442. You know, it's 0.1% bigger, 10% bigger than my normal stake size. So it's not, you know, not going mad, is it? Right, so there we go. So there's a good example again on the DAX there. So we've now got a range formed on that candlestick. That one candlestick is more than 15% of the average daily range. So we'll break that. We'll go for it. Either that is a fake out or it's a reason to go long. So we'll take it. And obviously the risk on that is now reset back to 10 because we're in profit. So we're not going to chase, we're not chasing losses. So let's roll it back to normal. Let's just try and trade normally. Right. I think that the constant war in the brain between what gives pain and what gives pleasure is one of the most difficult parts to manage on this work. Yeah. I've done loads of courses on, not loads, I've done courses on psychology, 2 or 3 courses on psychology. I've read lots of books like Trading in the Zone by Mark Douglas, absolute classic example. Tom Hugard's book, yeah, again, it's more about, there's no trading strategy in it. It's about how to trade and the psychology and what you need to do as a trader. So you can do as many courses as you like and read as many books as you like. And I've done that, but it doesn't help. You will get, and it's like all trading, and I've said this before, you can read as many books and do as many courses as you like. It makes you educated. It doesn't make you a good trader. Yeah, it makes you knowledgeable. You can throw any question at me about trading and I know the answer to it because I'm incredibly knowledgeable about trading, but not because I'm showing off or because I'm brilliant. It's because I've been doing it for 20 years. I should know everything there is to know about trading. You can learn as much as you like about psychology, but it's not going to make you a better trader unless you understand what the psychology of trading is and how it impacts you. Yeah. So how it impacts you and how it impacts me is different. We've got different buttons, different pain sensors. We're trading with different account sizes. We've got different expectations. You can say to yourself until you're blue in the face, my expectation is to bank 2% a day. But when you're 3% down, your expectation is I really want to bank 5% today. Understanding why you want to bank 5% today is more important than wanting to bank 5% today. It's the understanding that psychology is a massive part of this. But the reason I don't go into psychology in any of my material is because I don't believe that you can teach people psychology, the psychology of trading, because every single instance and circumstance is different. I'm looking at this NASDAQ trade going in at the moment going, I don't want to take that. But there's something affecting me right now, and you'll be looking at that going, well, it's going to gap fill. And I quite agree. It probably is. But the reason I don't want to take that is because I'm also going to be taking the DAX. And if the indices are going to move on this news that's just happened, they're both going to go, which doubles my risk on a day that I'm up 1.4% already. I understand what's going on in my head. My pleasure sensors have been tickled and my fear sensors are being tickled at the moment, which is telling me to reduce risk. So that is the thing that I want to do right now, because this one is going to work anyway. Yeah. Understanding that is because I've read a load of information about it. Yeah. But there isn't anything you can say to somebody that this is the best thing to do, because every human being is different and every human being is going to react differently. Every human being is looking at a different time frame with a different strategy and a different bias. You can't teach it. You've got to do it. You've got to go through it and understand what it is and how it affects your trading. This is why you can't pick up someone else's strategy and trade it. I can pick up any strategy on the planet. My approach to that strategy is to stick it in an EA and backtest it. That will tell me whether or not I want to trade it. Yeah. Other people will pick up that strategy and copy it exactly, but they won't execute the trades exactly because they'll be using slightly different risk or slightly different this or slightly different that. And every single one of those micro differences you make in a strategy affects the outcome of the strategy, which affects your psychology differently to the person that taught you the strategy. Every strategy is transferable from time frame to time frame to time frame. I can teach you a 5-minute reversal alert ADR strategy. Someone will take that and transpose it onto the weekly time frame and use a 3-bar reversal on weekly range extensions. Yeah, they're doing the same thing. They're mean reverting. But the reason they're doing it on the weekly time frame is because their psychology is not suited to the 5-minute time frame. But it isn't because someone said you're not suited to the 5-minute time frame. It's because they traded the 5-minute time frame, they traded the 15-minute time frame, they traded the hourly time frame, then they traded the daily and the weekly time frames, and they felt comfortable in themselves at that point. That's their psychology playing out. It suits their personality, which is why you see all these people racing around in prop firms trying to copy these guys that are making loads of money in prop on 5-minute and 1-minute and 30-second and tick charts. They're not going to be able to do that because they haven't got the mental capacity to trade that high erratic nutty time frame. I'm the same. I'm good at scalping and good at reading price action, but I'm terrible at trading on 1-minute charts. I'm just not. I burn out. I lose focus, something else happens, and I just can't do it. It's my psychology that stops me from doing it. It's not my skill. I know how to read price action very easily. Yeah. But it doesn't help you, does it? If you can't physically do it because it's not right for you. Sorry, just joining. Did you change the ADR period on the ORB? I'm on 3. At the moment. Honestly, I don't know what's right. I didn't hit the minimum range size. Yeah, so if you're on 10, maybe you didn't. For that. The right stop loss size to use today is 15%, not 10. So if you could just go back in time an hour and change it to 15% stops, not 10% stop, you would have survived that and you'd still be in this. If only we'd known. Yeah, this is part of the frustration of stop loss trading. But yeah, I'm on 3. If you're on 10, you'll have different results to me. Well done. You are not 400 down today. I am. Yeah, so you're on the right ADR, Richard. I'm on the wrong one today. Who knows what you should be using at the minute? This market is nuts. Okay, so that spike that we just had was China is to open talks if Trump shows respect and names point person. Let's put it in there. We will do business with you, but we're not doing business with him. Put someone else up front, and it's not going to be JD because he's an idiot. It's not going to be Trump because he's an idiot. Put someone who is respectful and knows what they're doing in front of us, and we will talk. Otherwise, a great comeback from China. Yeah, Trump yesterday issued an ultimatum. You may have to choose between China and us. Who do you think is the grown-up at the moment? China or the USA? The child has just told the world to either come and live with the kids or the adults. Yeah, the adults are promising money. The kids are promising chaos, fun. Hey, no, China. They make everything that we have in the UK. We're going their way. Much easier to make a deal with them than it is with the US. Path of least resistance. At the moment, the US is incredibly resistive. I think he's just shooting himself in the foot, and that's a really good reaction from China. So as you can see, markets liking that. Basically, come and sit around the table, China are saying, but someone in charge that's obviously got half a brain. There we go. So long everything up another 27. So not reducing risk was the right thing to do there in that particular case. But anyway, look at that oil straight up the target. Lovely. So break even in on that one. So the other thing I should mention about this strategy as well, trading stop losses work on timer every 1 minute. So what the strategy does is, and this is a brilliant example, on a spike, we reduce risk, yeah, and lock in. So cannot lose on that trade. It's locked in, guaranteed profit because we've spiked. So it's another really good feature of this strategy is that it doesn't work on candle close. It doesn't work on tick. It gradually every minute checks to see whether or not there's an opportunity to cut risk. Yeah. So we've got a move. We've got the breakout. There's a 60% chance of failure because it's a breakout strategy. Let's protect it. We're up. We've got our risk down low, no risk whatsoever. Yeah. So it's very clever, if I do say so myself. That's just so annoying. I might get the footsie, but we're taking a breakout after the move. I would expect a pullback on it. Not even sure that's a good trade to take, but I'm going to let it play out. We can recover the loss. Something too personal to be taught. Yeah. Yeah, psychology is just so you read book, but the best book you can get, the best book on psychology is Trading in the Zone by Mark Douglas. There's PDF versions all over the place. Mark's dead, unfortunately, but yeah, I mean, it's a brilliant book. I've got a hard copy of it somewhere. I keep looking over there. I've moved all my books. I can't remember. I think I've gone downstairs, but that's probably why we want to also tend to depend on EAs. It helps remove some of the decision making. Yeah. Hence the search for the Holy Grail. Exactly. This is the thing. This is why I use automation. I don't use automation because of any other reason than it speeds up the calculations, all the complex stuff that you have to do as a trader. What lot size should I use? Which strategy should I use? Every decision-making process you make as a trader, if you build it into automation and you let that automation play out, you can't get it wrong. It can go wrong, obviously. It's a piece of software. It can have bugs. It can have things wrong with it. Your internet can go down. All sorts of stuff can happen. But if you build your strategy into automation, it gives you back testing, robustness testing, and decision-making processes taken out of your control. The one thing that most people get wrong is the emotional part. Remove the emotions with automation. Yeah. The other thing about automation, it doesn't remove the emotions completely. Yeah. Because I can still come in here right now. Oh, that's going to stop out now. I can come in here right now and close these out myself. But because I've done back testing, I know the automation has an edge. So you're more inclined to let your trades play out if you've seen the results of automated backtesting on the strategy, yeah, and you know that that happens, you're more likely to let that try and happen than quickly try and grab that 27. Look, the right decision was to have grabbed that $27 I just had. Or was it? Yeah. I don't know yet. not finished, is it? But because you've seen it happen in backtesting, you're more likely to let it happen in real life. And again, it removes that psychology. The backtesting part is the most important bit of trading. And not necessarily to find the right strategy. There's thousands of strategies that work. It's proving to yourself that you have seen this strategy work. You know it works. You've watched it in the backtest to make loads of money. You know what sort of price action it's going to do. So it prepares you for when that happens to go with the flow and let it happen. People that don't backtest and people that buy EAs and go, I've just got the EA, what's the best set file? That one. Okay, load it, put it on my chart. Right, what's it do? Those people are not going to make it because they won't be psychologically prepared for what's happening. I get so many emails. I've put the market reversal alert CA on my chart. Hasn't taken a trade in 2 days. Has the conditions been met? What conditions? Okay, go and watch the bootcamp. That's 14 hours long. I haven't got time to watch the bootcamp. You're not going to make it. Sorry. It's a very complex job. You can't just stick something on a chart and print money. If you could, we'd all be billionaires, wouldn't we? Happy to be out today, Richard. Yeah, you're lucky, I think. It's going to be one of those days. It's one of those days where it could be amazing. It's one of those days where it could be like this, just frustrating as hell. And of course, your TP on long DAX hit by the pip. My stop loss on long DAX, yeah. But like I say, this is the thing. And people will say it. I'm pretty sure I'll have a message come in shortly. I've just got stopped out on the DAX to the pip. Should I adjust my stop loss to be 15%, not 10? Today, yes, you should. Tomorrow, I don't know. Backtesting shows me 10 is better than 15. That's why it's on 10. You're never going to win, are you? Because it's random. The price action every day, the way that the candlesticks move and the order they move in is random every day. This day has never happened before. This price action we're seeing on the DAX has never happened before, and it will never happen again in this exact price movement. So how could you possibly forecast what on earth to do with it? It's frustrating. It happens. But then again, I look at my P&L and go, yeah, it happens. But then these massive days come in where all of a sudden, because the Canadian dollar reduces its interest rate by 50% and we weren't expecting it, the US dollar collapses. The stock market goes through the roof. Everything hits TP at the same time and I walk away with $4,000. It's nothing to do with skill. That price action that happens because that Canadian interest rate doesn't come out at what we were expecting it to and the indices go crazy has never happened before and it will never happen again. This has never happened before. It has happened lots of times. But, this candlestick pattern in this order at that size with those bodies and those wicks, it's not going to happen again. So you can't prepare for it. Just accept it. Get on with the next trade. It's all to do with risk reward with stop losses. Mr. John Wick AI, yeah. Do you have a minimum return drawdown ratio that you work to when backtesting? No. With stop losses, I test everything, but you'll find it's always positive. So if you look at backtesting results, I'll just find some. Any will do. That'll do. If you look at backtesting results, robustness testing results, and you go down to, let's sort by, let me find one that's not filtered. I'll just unfilter it. So if you sort your robustness testing, by return on drawdown or by profit, and then you look at your risk multiplier and your this isn't using a, yes it is 2. No, that's your multiplier. lot multiplier. Let me just make that one. Oh, I can't. 1.2 then. If you look at the risk there, that's the stop loss. And that is the part close. Okay. So that is in effect, because it's using 75%, that is the TP pretty much. So stop there is 0.1. The TP is 0.5. So it's 4R. 0.1, 0.4. Yeah. All these are mostly 0.5s and 0.4s. But here, look, we've got a 0.1 and a 0.1. So that is a 1-to-1 risk-reward ratio. Yeah. That there is a 1. That there is a 1. That profit is 8 grand. That return on drawdown is 12%. Yeah. So I test everything. I do not go, I have to have a 1 to 1.5R. Because I know that I can get a 1-to-1 with a 70% strike rate that will generate a huge amount of profit. This is the NASDAQ. The NASDAQ moves fast. So if you get into a break on a NASDAQ, it will go 1R within 5 minutes, very quickly, very often. So on the NASDAQ, you don't need a positive R. But if you use a positive R, that will also generate a very high return on drawdown. But what I like to do is see everything, because it shows me, for example, with these 1-to-1 risk rewards. So these 3 here are 1-to-1 risk reward. It shows me that if I use a 1-to-1 risk reward, I get 50% less drawdown, but I make 4 grand less profit, which is around about 40% less profit for 50% less drawdown. So if you're the type of person that likes low drawdown, use a 1-to-1 risk reward ratio. And if you tell someone that that's what you're doing, they'll turn around and go, that'll never work because it's got 1-to-1 risk reward ratio. Yes, it will. It will work with a massive degree of probability as well. Yeah, these are all 1-to-1 risk reward ratios. The drawdown on these is very small as well, but the return is smaller. So you have to test everything. So I'm not a believer in you have to have a positive R to make money, because you don't. I could use a 0.1% TP with a 15 ADR stop loss and make money 99% of the time. But that one time I lose, I'll lose 15R. If my strike rate is 99%, there's an edge. If my strike rate is 97%, there probably isn't an edge, because your P&L will go like that. Boom. Boom. Yeah? How many EAs do you see on the marketplace like this that go like that? And then they start again. People buy it and people blow. And then they start again. Depends when you backtest it. Yeah? But you need to know what the impact is. So I don't care about R's, really. I prefer to have a 1 to 1.5 or 1 to 2 risk reward ratio, because it's nicer on your P&L. Yeah. So when those winners come in, you recoup the losses better. But as I've just proven here, yeah, it's all pulling back now. Look, there's a fake. It was just a spike. Should have taken that money, so now it's going to make a loss. Broke even on the NASDAQ. Yeah. So you know, as I've just proven here, I can recoup losses by closing out 50% of trades. So the risk reward ratio on that gold trade, which is still that's a new one that's just been taken. On that previous gold trade, recouped that DAX loss. But the R factor is irrelevant, isn't it? Whether I was targeting 4R, 3R, 2R, 1R on that trade, doesn't matter. That trade's purpose was to recoup that loss. So the R on it is 1. There's my risk. There's my reward. I have a benefit of a runner. So it doesn't actually make any difference. But that gold trade had to get to 2R to be able to close 50% of it. to pay for that. So I had to wait for it to move 2R, but I didn't take it off at 2R. If I had, that would be up at $30 now. In fact, yeah, I would be another $10 better off. But for me, stop loss based trading has never been very successful because I have always found in backtesting with vast majority of strategies, there is an Achilles heel in that strategy, which means that when the market condition is not correct, it gives back all of the wins. Unless you have something that has something like a 3 to 5R, yeah, with a strike rate of 50+%. But you won't get that on that type of strategy because it needs to be a trend strategy. And it takes too long for those trades to play out. So it just doesn't work. Portfolio trading, which is what I've always done, works. But I switched into position trading because I always found that there was a zero-sum game. You would always get back to some kind of break even at some point because the market conditions would not be right for the strategy and it would just hemorrhage cash. The only thing that stops that happening is you stopping trading. If you stop trading, you can't pay yourself, which beats the object of becoming a trader. Yeah. It's incredibly complicated, the whole process of trading. You know, it's all about numbers. It's about, at the end of the day, your job as a trader is to make this green. Make this green. Yeah. So when you see green on your P&L, you take the green. That's what you do. Yeah. When you get red on your P&L, you wait till you get green that equals that red, and you take that green to make that red disappear, and then hope that the next trade works. If that doesn't work, you could end up bashing your head against a wall all day long, like yesterday. The EA batted its head against. I didn't do it. The EA did, but it batted its head against the wall. There's all yesterday's trades, just losing, winning, winning, losing, winning, losing, winning, winning. Ended up doing virtually nothing. But look at the strike rate on it. It's 55%, 60%. There's no 2Rs in there, is there? 1189 was the biggest loss. 1277 was the biggest win. But not because it didn't want to. The TP was set at 4R or 3.5R. Just couldn't get there. But it can deal with itself, deal with its own losses and manage its own risk. And that's what you do as a trader. And this is the bit that people, I think I used to struggle with, is I need a strategy that has this rule, this rule, this rule. It uses this amount of risk and this amount of reward. Go. Not that cut and dry. There isn't a strategy that uses this risk, this reward every time on this market at this time using this indicator that does this on a consistent basis, because this is random. You cannot get consistency from chaos. Look at today. The NASDAQ has just gone absolutely mental. They're all asleep in America. This thing isn't. Yeah, it's chaos. It's randomness. There's a load of orders being dumped by an algorithm in the market because of a news event that 90% of the people in America haven't seen yet because they're asleep. You can't formulate a strategy on that. But what you can do is take the money and now deal with the loss, because it's going to give all that profit back because of this spiky news event. But what it will do is it will adjust, because it is a clever EA based on a real trader who knows what it should be doing when this instance happens, because he's experienced it in the past. That's all you can do is experience. There's no, I now need to go for a 3R or a 2R. What you should be doing now is dropping your risk reward ratio to 1-to-1 to recoup your potential losses. Yeah, get yourself back to break even and call it a day. That's what you should do, because this market is not right. It's erratic. Why is it erratic? Because we've got Trumpism going on. Yeah, but when Trump is not in power anymore and someone like Biden comes back in, the market will go back into a different, completely different rhythm. And all the strategies you traded during Trump will fail. You will need to adapt. The ADRs I was trading before COVID were 3 times bigger than after COVID. I had to adapt. Yeah. So, you know, risk reward is a very small part of it. Risk, you know, and again, using Zone Trader, when you're setting your targets, if you're going to short this now, for example, I would target there because I would expect that to become support. So if you're going to go short here with a stop loss there, your risk reward ratio is where you think price is going to go, not 4 or 3 or not 2. What's the point in 2 or 3 or 4? It's there because that's where the next price reaction point is. So you can't have a set return drawdown ratio. You can see them all in back testing, but you can't say that's the one to use because every time it's going to be different. If this thing moves 15R now and you took a 3R on it, you're going to be really cross, aren't you? But you didn't know it was going to go 15R. So you just take the money. When the money is presented to you, you take the money because you need it to pay bills. That's what the job is, isn't it? It's a job. It's a business. It doesn't work on standard. When you look at pricing in a shop, really good example, parallel to Paul. You walk into a shop one day and all the iPhones are £1,000, whatever it is. You go away because you haven't got £1,000. You come into the shop 2 days later, you're walking past and the iPhone's dropped by £250. Now you'll walk in and buy it. The risk reward ratio from the shop 2 days ago was buy at 250, sell at 1,000, make 3R. Now they're making 2R on them. Why? Because the business income has changed. They had to adapt. Yeah. All businesses have to adapt to the current situation. This is random. You see how difficult it is to develop a strategy that is consistent when you're trading something that isn't consistent. Trying to make a straight line out of a piece of string that's moving all the time. It doesn't happen. You've got change. Wish it was easy, you know. Wouldn't that be nice? But consistency comes from backtesting and historical analysis. But the edge that you find is knowing that there isn't one. There is, I mean, all of them. There's 3,200 variations of the ORB strategy here that all generate profit. 3,200 variations of settings in here that generate profit. Which is the one to use today? Just accept that this one has an edge in the past, therefore it has a probability of an edge in the future. That's all you can do. But you've got to give yourself the faith in the system by doing the testing, by understanding that if I use a different risk multiplier, I use a different stop loss, I have a different maximum size of lot, I have a different range size that I'm going to trade, and I adjust my trading stop to different levels, and I use a different target. Doesn't matter which of those combinations I decide to go with today, there's a probability it will play out long term. I may lose 15 trades in a row, and this has lost 15 trades in a row, and it will lose 15 trades in a row again. But you can't do anything else because you can't predict the future. Does it make sense running different permutations at the same time? If you want to, yeah. The downside, so if you're saying to run them on the same instrument. So if you were to set up 3 terminals, one trading 0.1 as a minimum, one trading 0.15 as a minimum range, one trading 0.2 as a minimum range, what you will get on some days is all 3 of them making a load of money, all 3 of them stopping out, or that one trading and those 2 not. But the long-term edge on that one will play out. The long-term edge on that one will play out. The long-term edge on that one will play out at some point. On a day-to-day basis, what you're going to see is 3 different results. And if you do this as an experiment, and it's not a bad experiment to do, run 3 different variations. Yeah. After a month, look at each account. If that one is in negative 2,000, that one is in negative 1,200, and that one is in positive 4,000. Yeah. Does it mean that that one is the best one to use? Just means this one's had a drawdown month. Next month, that is going to be positive 4,000. This one is going to be negative 5,200. It's only 1 month's worth of data. This one made 10,000. But you decided not to do that one because it was too similar to that one. And you went with that one because it made more money. But next month it lost. And all of this stuff would have made you 14 grand, but you didn't do it. But every single one of them, when you back tested it, gave you a strategic edge over a period of a year. But they all P&Ls go like this. Yeah. That is the edge. This is day by day by day. This is market being flat and range bound. This is market being parabolic and explosive. This is the market being range bound. This is earnings fortnight. This is the month after earnings fortnight where the market goes contracted, waiting for Trump to get into his presidency. Yeah. It's the strategy. It's a breakout strategy. The market is not breaking out. It's going to be a negative P&L. Accept it. You're going to have days in a row where it's just not going to work. But if you'd have used a 15% stop loss today, right, on this trade short, the stop loss would have been there, not there. You still got stopped out. On that long, I got stopped out on my 10%. If you used a 15%, you're still in it, but you're in drawdown. If this now goes like that, well done. 15% was the right set file today. If it goes like that, 15% was exactly the same as 10%. We lost both. See what I mean? It doesn't matter which one you use. The market will move and it will either work or not. What I do when I test is I look for something that happens more often than not, if possible. So if I look at back testing results and using 0.1 gives me a 12R return on drawdown. 0.15 gives me a 7R on average, and 0.2 gives me a 3R. What it tells me is that you make more money with that. That you will find that the trade numbers will be 200 trades a year, 450 trades a year, and 900 trades a year. If you're the type of trader that has to be in the market because you can't bear not having something on, that's your set file. If you're the type of trader that likes low drawdown and likes to only take high probability setup that don't make as much money because they're only targeting a 1-to-1 risk reward ratio, that's your set file. All of them make money, but they have different ways of achieving the same result, which is profitability. Which one suits your personality? Which one suits your psychology best? Yeah, and this is what I was saying earlier about psychology. Some people go into the 1 minute chart and go, 1 minute chart, I'm going to trade like this all day long and I've got so much energy and I can handle it. Other people are like, I just want to wait and see for the first hour if the market moves. I'm going to make sure there's no news and yeah, I'm going to check that yesterday was like this and right, so we're an hour in, it's not quite where I want it to be. I'll go for a long because the trend line's going up. If you're that type of trader, you're going to get different results. But if it goes long today, you're both going to make money. But you're both profitable traders. One of you is a nutter on a 1 minute chart. One of you is a very slow, considered person on an hourly chart. Doesn't matter. Which one you are means trying everything on. You've got to go in the shop. You've got to try on every single piece of clothing before you walk out with that perfect outfit. Yeah. Which means buying all the courses, trying everything, just doing everything. Yeah. Learning. It's a long process. It's not something you can go, this guy's got this book on trading. He's got all the strategies that have made him money in the past. Right. I'm a trader. No, you're not. You're educated. That's it. doing is completely different, which is why I say use the back tester all the time. Get yourself in the back tester, watch it visually, watch the market move, stick an EA on, and it doesn't matter if the EA makes money or not. If you see that chart going past you month by month by month in 5 minutes, you've had 3 months worth of price action burnt into your retinas. Go and get the zone trader EA. Just do it on demo and draw zones on the chart, support and resistance, and watch yourself get it right. Watch yourself get it wrong. Getting it right and getting it wrong teaches you what's happening in the market. It's moving up and down between support and resistance. You'll go, well, sometimes it works and sometimes it doesn't. There's a lesson. 50% of your trades are going to work out. The important thing is, where are the 50% that work out going? How far? If you can draw a box where it's going to and get that right, you're a trader. Yeah, it's spending time doing. It's not the job that you can be taught. You can't. This is why people like Learn to Trade and Greg Secker are useless to this industry, because you get 50 people, you charge them $4,000, you sit them down in a chair, you stick a whiteboard up and you go, this is a candlestick, right? You can read a book and find out what a candlestick is for free, or watch a YouTube video for free about finding out what a candlestick is. Now go and see if you can read the things. If you can't, keep reading them until you can. If 6 months later you still can't read them, go and work at McDonald's. It's not easy at all. Yeah, and it's all about analysis, statistics, psychology. Yeah, none of it can be taught to anybody in the same way. But if you do 10 courses, you'll suddenly come out at the end of it going, I kind of get what they're doing, but none of them are right. And you'll suddenly, a light bulb will go off. Every time you do a course, there's a light bulb somewhere. You just got to get enough light bulbs to light the room. That's the difficulty. That's the hard part. It spends time and money at the end of the day. Anyway, I'll let you go because it's 10:13 now, and I was going to go about an hour ago. I'll be back this afternoon, 10:15, 12:30, 2:30 even. Oh, get it right. And we'll see what happens. But choppy old session so far today. So there you go. My profits disappeared. Losing trades. So we've got trades on. We'll see if we can recover this. But yeah, one of those sessions today caused by that nasty spike. So keep your eyes peeled on the news. Obviously, Trump's asleep at the moment. There's your Eurozone CPI come out on forecast. So probably no movement on the euro. Yeah, basically we'll pick up this afternoon and see where we go with the afternoon's trades. But bear in mind, we've got news before and we've got news after. So it's going to be a tricky session this afternoon. 1:30 news and then 2:45 news. So we'll that will have happened. So we'll have a look at what's happened there, but we'll be online for that. So we'll see how we go. All right, have a good day. Anything you need, let me know. I'll be in Discord or Telegram, and I'll be back this afternoon. Have a good day.